and sound level before the film begins. This leader is provided to permit the projectionist to complete adjustment of focus and sound level before the film begins.
All right, let's see. Are we live or no? Check 1, 2. Good morning, good afternoon. I think it's afternoon at this point. Depending on where you are, it's probably nighttime or even early morning. Got a few things you got to do. All right, give me just a moment here, guys. Welcome. Happy Sunday to all of you out there. Over the weekend, or Friday, I lost my voice. Gone. It's kind of wild. I had to whisper to my wife, and then it was pretty gone on. There, switch right over. Pretty gone on Saturday as well, and then this morning it's not doing too well, but I'm hoping that it's fine by Monday. So I put my phone down on Friday because I didn't want to feel the need to blab on a phone call. I've been trying not to speak. I actually didn't speak at all on Saturday. No conversations. Let me just check the chat here and see how everybody's doing. So this will be recorded. Someone's asking, can we record this? I'm doing great. How are y'all doing? Happy Sunday to everybody out there. So yes, this will be recorded on YouTube. We just make sure YouTube is going. Awesome. I see everybody in YouTube. Hey, Emmanuel. Hi, Binky. Hi, Brian. Willie Smoke Me. Anybody out there that wants to know if we can be cut sections out, that kind of stuff as well. Trim it down and repackage it. Make sure it's clear for everybody over the weekend. Well, hello, Liam, STT, Voyager, Taylor, Patrick, K-Goose. No bailout yelling. I think at 1 o'clock today we find something out about this. I don't know if that's still on par for the course. I haven't been on social media, so I don't know what's happening out there. I have read some news articles. We'll review those. It looks like at 1 p.m. there might be a decision made. We have an emergency meeting planned, I believe, for tomorrow. Morning, Alexander. Dougie D, how are you? Loner, how are you? Let's see who else. We've got Elvram's in here. Ross Walks is in here. John Klopp, Com 19106. Omar's here in the house. Petey and Gottfried's in the house. Regex generator. I like that. Is that for Gex or no? I don't know. Let me refresh the chat, make sure that everything is rocking and rolling here. All right, refresh the chat. We'll get right into it this morning. So it was a pretty big couple weeks here, right? We're gonna start. Let's start with the economic calendar. This will be a good one to start with. So we know by looking at vol down the road, right? That we have some coming. We know the market's beginning to price it in. These events. Typically, we buy into the FOMC meetings not always, but we tend to. We've had a lot of vol though the past week, right? We've had a lot of vol events. We're stacked up again for this week into this FOMC. With that said, we've got CPI coming out on Tuesday. We've got nothing scheduled for Monday. This is a big thing to understand. We've got nothing scheduled for Monday. We've got an emergency Fed meeting we have these. They're not uncommon. When they happen, they tend to be they tend to be, well, I'll read an article for you about it, but they tend to be nothing burgers. When that was talked about on Friday as a potential vol event, they typically are not, in my experience, at least historically. So we don't really have anything planned for Monday. It's a perfect day for us to bounce. Sunday, tonight, futures, and then tomorrow to bounce. And we'll look at the VIX and some previous examples of the VIX having such a spike. What typically happens, it didn't happen on Friday, but we spoke about it happening on Friday or Monday or over the weekend where you'd get a reversal. What happens after, though, is usually not good. We'll talk about that leading up to the vol later in the week. So you figure Sunday into Monday or even Friday, we couldn't get it because of we didn't get the bounce. We got the reaction trade lower. But if it happens on Sunday, Monday, we should get a reversal. It should happen Friday, Sunday, Monday, somewhere in there. And with no real news on Monday. Plus, you have some other stuff going on today at 1:00. You have Bill Ackman out there saying to come in and bail out the banks, or at least the mid-sized banks. And can there be systemic contagion around the markets? And specifically, it's not just markets. It's not just startups. In tech specifically, there can be panic. As a matter of fact, my wife this weekend went through our bank's structure and wanted to see if we were okay. Not surprising. And you see older people concerned about it over the weekend. There was talk all over Reddit this weekend from tech workers saying they might not get paid. Well, they may get this paycheck, but might not have a job. And it does scare people with money in tech. And you see some contagion. There was a streaming company that was impacted as well. Roku, right, was impacted. And it lifts the skirt up from underneath. They'll never tell you, right? You'll never have a large tech company or a large bank tell you how much exposure they have in cryptocurrency, how much exposure that they have to the second largest bank in history, right? That is folding right now. Oftentimes, you'll never be told what's actually happening behind the scenes. Whether there is contagion or not, you're not going to find out as a person on the man on the street kind of stuff. It's always after, for sure. Now, so we've got nothing on Monday. Tuesday, we've got CPI. That is volatility, right? We have retail sales and core PPI year over year. That's actually taken. It's not looked at as a vol event for this week, but it became a vol event the last report that we got. PPI, or producer price index, actually did matter the last time we had month over month stuff. So that's important to know. And then Thursday, we've got claims. So it's kind of stacked up, right? Even though everyone's looking at CPI, it's kind of stacked up for the rest of this week, and not a lot of emphasis on these other economic news events coming out on Wednesday and Thursday. Then we roll right into the FOMC statement next week on, I believe, is the 22nd. Is the statement right here, Wednesday the 22nd, 2 p.m. We have a FOMC meeting. So we're just kind of rolling right into it. More vol. More vol. That's what we're rolling into. And there's the idea that the Yellen, and the matter of fact, we talked about 50 BPS, and now Fed funds future rates are saying, no, we're definitely doing 25 BPS in this next rate decision, that we have broken something. And it is kind of odd to see the argument. I just read an article finally on Sunday about the shift of blame and the shift of why SVB is collapsing. And there's two different factions. And funnily enough, as the weekend went forward, I also watched AstroTurfing on Reddit, which I'm not even assuming, I'm going to guarantee was paid to say, everybody calm down. Just the tone of it, you could tell that it came from VCs or VC groups or tech insiders, not to create panic across markets, banks, public opinion, all those kind of things. They don't want to create that, right? So that was kind of odd as well. Just seeing that. So we do have a bunch of volatility coming up the current week, and then down the road we have monthly OPEX, right? That's the 17th, I believe. I could be wrong on that, but I think it's the 17th. And then we've got the FOMC meeting, and then we've got the emergency meeting. And then we also have the JPM caller coming up for I believe the pin is usually on the 17th. And then we lead that into the 31st. We trade sideways into end of quarter. And that's what the big question is. You remember Mike Wilson saying expect the last leg down in Q1 of 2023, at least for this bear market. So it does bring up those questions, right? You know that banks are positioned and hedged for a big down move into the end of this quarter. Now, a couple weeks ago, I posted on that Captain's Alpha. It's a good time to buy or structure some kind of a hedge. We talked about the Dow Jones, right? The DGIA or DIA is a good hedge out there. And SDOW triple leverage calls seem like the right play, and they're paying out right now very well. June hedges are paying out very well. And if you have not had a chance to get into a hedge, Monday might be a good opportunity. You might get an opportunity to hedge this market on Monday for some further downside into end of quarter. Now, today is the 12th. We've got another, I don't know how many, I think it's 31 days in the month of March. So you got 17, 18 days or something like that. 17 days, I think, to put a hedge onto the market if you have not already. Some of those actually pay quite well with an upside move. Now, I don't know if I'm going to get to some of the hedges to put on today. I don't think I have the time. So we might have to maybe I'll do a recorded video for that stuff. I need to get through the market with you at this moment, but I want you to see Ackman here is calling on the U.S. government to consider a bailout for SVB if private investors won't step up. And I titled this video, you socialize the losses in these banks. And there's some people that don't want that to happen, right? There's some people out there that just don't want that to happen. They want if you're going to privatize the profits, you should privatize the losses as well. But what does that do to the economy, right? And what's interesting is the quote here is that billionaire investor Blackman says the U.S. government should consider a highly dilutive bailout of Silicon Valley Bank amid jitters about financial position. The bank's failure could destroy an important long-term driver of the economy as VC-backed companies rely on SVB for loans and holding their operating cash, Ackman said in a series of tweets on Thursday. If private capital can provide a solution, a highly dilutive government-preferred bailout should be considered. It makes me think that it stinks of poison maybe in larger banks. And you saw JPM take that hit. You didn't see GS take that hit. And GS on a dot plot, I don't have the dot plot here, but if you look on the dot plot, they're slightly exposed, not hugely exposed like some banks. And how to simplify this for if you don't understand the concept of this would be You give me $10, and if you're a traditional bank, I have to keep, let's say, $6 in the bank at all times in case there's a run on the bank. And this bank, FDIC insured, didn't. They basically kept $3 in the bank, and they had a horrible bond structure as well to cover runs on their bank. But there's also the question about cryptocurrency, right? And losses that stress tests that have been done on banks by the Fed. Are they including any of this stuff? They're including cryptocurrency into these stress tests. To what extent are they? Crypto losses, and the bonds, and of course the Fed is breaking breaking things with raising rates, right? Which we can actually see in SVB, and then we've got Silvergate. These things are some of these things. They'll always come back 5 or 10 years later and say we didn't know the depths of mechanical issues with new forms of currency, with cryptocurrency, and how they impact banks and what they're doing. Now, so this Bill Ackman saying that's kind of a question, right? Starts to bring up stuff. If any of you guys remember Ackman in 2020, started to raise questions about poisoning of the markets and society with COVID, right? And how he was hedged and positioned. Then we've got on Mint, the U.S. Federal Reserve will hold a closed-door emergency meeting on Monday of the Board of Governors amid the fallout of SVB. The meeting will be held under expedited procedures as set forth on blah, blah, blah. According to the statement released by a Federal Review, and determine the advance and discount rates to be charged by the Federal Reserve during the meeting. And also the FDIC, Fed, and Treasury will brief California lawmakers on SVB. That's 11 p.m. on Saturday, after having to cancel a brief meeting originally set for earlier in the day. And then the Treasury Department is set to hold a separate briefing for lawmakers Sunday at 1 p.m., one of the people said. There was also a press secretary or something for Biden that was somewhat elusive, and was made hyper aware, was Jerome Powell made hyper aware of what's going on. So at least you know at the top that people are that there is concern. Have they broken something? Have they broken something more? So I don't think that these are going to be tech. I think you might hear something today. It's 12:36. We might hear something at some point today, or even on Monday. We might hear some kind of calming into the marketplace. So it actually sets up for some kind of a green day on Monday, if we hear those things. Now, we're going to get out of this real quick. We're going to go to the economic counter. We're going to get rid of that stuff there. We're going to go to, this is all the macro you need to know chart that we use. And I just want you to see the Fed. This is the Fed funds rate above right here. And if it starts to pause and roll here, if you start to see the Fed funds rate, if that helps there, maybe a little bit lighter. Start to see the Fed funds rate kind of crest here. And you can start to see the curling up slightly of the unemployment rate. And we're seeing the leveling off of inflation. And inflation actually has to come down. It's somewhere it's close to in here. I can bring this one up closer, but as you start to see this stuff right now where we are, it starts to make you wonder that we're close, right? Specifically, let's look at the inflation rate. And as we start to roll down this inflation rate, I want you to just look back here. And these aren't going to match up exact, but you can kind of see the rolling over of inflation, the curling up of unemployment, and maybe some new rules in unemployment, and some reinterpretation of unemployment, and then the Fed fund rate stabilizing and then starting to roll over, and that tends to happen in markets. Kind of the same thing right here. You see the pre-running of unemployment. You see people in the banking, or SVB is going to make a lot of people unemployed. We know that, right? We know it's going to impact a bunch of companies. $250,000 FDIC is not going to help these workers get their job paid for in a week or two. So you're starting to try to front run some kind of a topping pattern here in the market, maybe even a roll into the market. Now, this is the SPY, but if this was SPX, you start to question if this is going to be the next leg lower, or even just an attempt to front run, even if it's only brief. It's only brief in the end of quarter. We let all this vol come out into the market. You get a front running of, so let's say you front run this event each quarter for 2024. Even if we don't roll down hard and heavy into a new low in the market, there is going to at least be the positioning for it. You hear us talk about, we're retail traders. We're talking about, I think it was on February 2nd. Hey, put a hedge on the market with some June S-style calls, right? And now we're talking about if you weren't in those calls, that if we have a good day up or something like that, that you put another hedge in the market, or take the profit and then put another hedge in the market for end of the quarter. And this should be the standard for each quarter for the rest of 2024, unless we start to track again to break higher than 420, right? To have that no landing situation, which we're not in right now. Price is not showing us that we're in that no landing trade any longer, right? We're not trying to make attempts higher from 420 to 430 to 440, 460, and so it's the time to hedge the market into June now at this point. So just this stuff here, looking at this stuff here, it's looking like even if it doesn't play itself out, that you should be positioned for some kind of a front running from institutions into let me get rid of this one real quick, into end of quarter. So with that being said, what you need to know for Monday, this is the juice here. This is the meat of everything. Is that this 396, 397, somewhere in here. I'll give you an exact price, but let me look at an exact price real quick for you. And we'll look at this on another chart here in just a moment as well. But one of the key things I want you to realize and know out there is that if we don't get above I'll give you an exact number on SPY. If we don't get above 399.78 and hold it, it's another sell opportunity. And so if we get this, let's say we get a squeeze higher overnight here. Change the, and I'll go through the VIX with you in just a moment. But and we'll go through the VIX. But in all honesty, if we're not going to get above this 390, I think it's 399.78, which is even higher. It's way up here. If we don't get above this number up here, it's going to be bad news. It's going to be bad news for the rest of the week. There's nothing else I can tell you about that other than that. This is where your daily trend is, above this line here. Your swellers are up here. Your hourly is below. We could see a nice, beautiful day tomorrow, cranking day, and look at how big that day that would be. You're talking about not only erasing everything back here. Let me see if I can move this over for you a little bit here. You're talking about needing to erase not just the scene of the crime, but to come back and hold above here to even begin to talk about bullishness in this market. And if anything, for next week, my expectation is that I expected this either Friday, Monday, somewhere in here, that you get a swing high, and we would lose it and start selling down again. And that's due to the spike in the VIX. We don't see those spikes frequently. When we do see those spikes, we typically are reversing to much lower lows. We tend not to recover. We tend not to recover to a bullish stance from those VIX spikes historically. We'll try to take a look at them. But for right now, for next week, the key level for you is 399.78. If you're a bull, to recover this, it is the place that you would execute as well. Matter of fact, we'll probably do hedging. I'll come on early tomorrow. Try to come on tomorrow at 8:30 in the morning, and we'll talk about looking for a hedge to place up here on some kind of a failure for the rest of the week into the 17th, into OPEX, and possibly even into the 31st. And we know that JPM Collar doesn't want us above 4060, which is somewhere up in here as well, right? So all of this stuff is kind of making sense at this point, right? It kind of all jives with each thing in the market. We know that we have vol on Tuesday, we have vol on Wednesday, and then we've got OPEX heading into the 17th. We know that they're not going to want price to be above 4060. So all these things are saying that we get some kind of rejection, because Monday, Tuesday, Wednesday, Thursday, Friday, you're going to expect, and if we don't get it, so we get it by Tuesday, and then we start coming back down into some reality into the 17th, and maybe even further downside into the FOMC meeting on the 22nd, which could be truly the deciding factor into end of month. If we do get if he slams the market down one more time into the end of March, and maybe we get down to that 3600 or even 3060 is on the plate. And just looking at a higher time frame, we're going to go over some stuff with SPY and SPX. But I want you to see this, that there isn't much support here. I haven't heard this a lot from anyone out there, but I want you to know that there isn't much support here. I want you to know that where we are right now down here, that we are below the weekly and monthly triggers. We are below weekly and monthly support in this market, which combined with buying is very supportive. So if you just look at this area here, so let's say you have all this accumulation here, you still want this accumulation to also be under weekly and monthly support, quarterly support, and that kind of stuff, right? So you have 4 levels to break through. They smashed through that stuff into the end of February. All the monthly, weekly support's been smashed through. It's gone. There's nothing there. So the only thing holding us up right now are buyers from October and buyers from December. That is it. That is all that's holding us up. The next support level is quarterly support. That's down at 3,300. At any moment, the market is set up here at any moment to rug pull this market, and it's all owned by institutions. So, and I don't see that out there right now. I've talked about, and it's an important thing to know, is that the market is set to drop to violent lows at this moment that they couldn't get through when we were above weekly and monthly support. And now we are. So no matter what anyone else is telling you out there, I'm going to show this to you right now too. I want to show it to you so that you can understand the concept that I'm trying to lay out there for you. Give me just a second here. I want to do one quick thing here. I'm going to try to change the I'm going to try to show you something here on a different time frame in a moment, but this is a daily time frame. But I want you to see on this daily time frame. I want you to see in this daily time frame. I want you to see a couple things that are happening here. And 2 of the important ones would be this yellow line right here and this green line right here. This is trend. This is trend where the market goes up and down, right? Regardless of support in the market. And we're below the hourly. This is the green line, and the yellow, the daily. We're in a bearish stance. But we've also broken this orange and blue line. This orange and blue line is actual market support. And we smashed into it heavily during we smashed into it heavily during the end of month. I want to see this in February, okay? Came down, we smashed into it here, 1, 2, 3, 4, 5, 6, 7 times, trying to erode automated selling in the market, or not selling, buying in the market. These are sellers selling into the support in the market, and they did this brutally beginning on the 21st of February. And as a matter of fact, here we talked about how bulls needed to get above the daily here for the continuation move higher in the market. When they weren't able to do that, we were going down, right? And we talked about that, right? Once we didn't hold this and came back down, we said, that's it. The bulls are over here, right? We had a quick squeeze up, and sure enough, we went straight below weekly and monthly support. And that's not good for the market here. It's really bad for the market when we get underneath this weekly and monthly support. We're kind of hanging out over here, and I want you to see this in terms of price. If we squeeze up into Monday, you see this hourly screaming down, you see this daily screaming down, and even weekly screaming down on top of price right now. And now, can we get a squeeze on this heading into the 17th or 31st? We can. And once the vol comes off the market heading into end of quarter, we can get a nice violent squeeze higher. But with this vol in the market and the hourly and the daily coming down, very violent rate. I can see that the velocity of this hourly coming down. We've got 391.59. It's a key level for you to know. To note tomorrow is 391.59. We need to be above that number on Monday for hopefully a move higher into 399.76, 78, 76, somewhere in there to at least test that number. And even then, we have to get above it to consolidate sideways for the hourly to come back up and rocket ship the market back higher. Now, without that happening, the move is down. And the scary part here is this is where we're going to get into where real support is, real, true support in the market is. It's much lower. It's down here. This is where quarterly support is. It's down on at 3. Currently, it's at 329.87, but into April or end of March it would turn into roughly 334, 335. I just want you to see that into the end of this quarter, but we can move down there. Do we move down there? I don't know at this moment. The key driver here would be if there's a rejection off of 391.31, if there's a rejection off of the 399.78, I would expect it. And this is kind of where you put that trade on the market. We're able to put that trade on the market here. If you put a putback spread on the market up here at either 391, or maybe you start a position and then add to it here. The keys here would be if you add that putback spread. If we do continue higher, that it would be a free trade for you. If we do reject and roll this market down and over, you'll get paid as well, right? You could also wait for a break higher from 391. You put the trade on here and see if we break below this 390. Again, break below this 391. If I had to guess, we're going to trade up into Monday to that 400. I'll bounce around waiting for the FOMC heading into the 22nd. So 390, 400, somewhere in there, and just waiting to drop the market whenever they choose into next week. So just be conscious of that. Be conscious of this move down. We're going to go back to see if I can. I want to show you the VIX really quick. This applies to ES, to SPX, as well as you know. We're going to look at VIX, and we're going to look at a few things here in VIX. I want you to see this. I want you to see briefly here in the VIX that the bulls need to get underneath 2157, 21, call it at 2185, 2154 to start to move down with this spike up here to 2697. And I'm going to show you this on another chart here. How bullish it actually looks. And again, I'm going to bring your attention to the weekly here. And this is the 3-month This white line right here, this is 3-month support for the VIX. Quarterly support for the VIX right here, 2173, and then daily at 2053. So key numbers for you: 2053, 2167, and also 2221. So if let's say we see the VIX come down on Monday, you expect the VIX to come down here, but then these drivers right here, if this support holds on the VIX, I'm going to expect it to rip even higher into the 17th, which is OPEX. So I'm going to expect this week to go down. That's what I'm expecting. Now, if we go in here and we bounce around and we start trading sideways, see VIX break through down to this $20.18 level, we might be in a holding pattern to go higher. But for right now, VIX is extremely bullish. One day, let me see if I can bring this up, give you a better representation on another chart. So just VIX on the weekly here. I want you to see how bullish VIX actually is in a weekly, how rare this is, and when this does happen, some of the events that take place after it. You can see this big, huge rip on the VIX here. On a daily candle, when you see candles like this in the VIX, they tend to have follow-through. You tend to have one quick down day, a failure to get below, and then it gets picked right back up and pushed higher. Same thing back here, and also we didn't even bother. This is December of 2021. But when you start to see these candles like this, unless we get under some key levels here, the VIX continues to go higher. I want you to see that the bears are in charge here. Bears are in charge right now to 2178 and 2053. So if you're a bull, that's what you're looking for. If you can't get underneath that 2053 and start to reverse trend, I'm going to assume that I'm not even going to assume. I pretty much know that that's above 400. You're going to be looking for price to be above 400 and VIX to get underneath 2052 and start selling down again. When you see these candles, historically, they tend to mean something. They tend to imply that something's going on. Another thing I want you to look at is HYG real quick. And I want you to see HYG here. We've got, so HYG, this is a daily chart, but I'm going to look at the daily and the weekly with you on HYG. We've got a giant gap down here that hasn't been filled. We thought we were going up here to close this gap above, but we're closer to this gap below. And not surprisingly, price is actually below. I'm going to show you this green bar, remove this green bar right here. So you can see that we're losing right now, and velocity is coming to the downside on HYG right now. So if HYG needs to get above 74.25, this needs to get bought tomorrow, and we actually need to get above 74.25. If we can't achieve this, the move is down. If we get this move down, you're talking about, this is the October low down here, right? And this is 3.4. I believe I think this is 3.45 in the market. So if this is 3.45, we come down here and we start breaking down here. What does this relate to? I believe this is the October low down here. This is December low right now. We haven't even seen this. This is December low right now, and this is the October low down here. We haven't even seen price in the S&P 500 show the December low at this point. So just be conscious of this of HYG if it continues to go down. You don't want to see a rejection above on 74.25. All the moves have shown that we're going to go lower. And as a matter of fact, HYG is not even showing the true price of SPY right now. And that's true too. Some of the where XLF got hammered, other parts of the subsectors of SPY have not shown lower prices yet to take it down. We're going to look at the weekly on HYG as well. And the weakness, the price action, we are below the red, the yellow, and the white right now. I'm going to show HYG on a 30-minute chart. And where it's targeting HYG. And I want you to see I want you to see the bearishness in HYG right now. You're below the 3 month, the quarterly, the monthly, and then also the weekly and the daily uh, and the hourly on HYG. I want you to just see that the violence in this move here, and I want you to see above here 75. It said 74.50, but it's actually higher. It's 75.12 on HYG. Not healthy, is it? It's not looking good right here. We weren't able to hold above. We had this break below on February 23rd, 21st, 23rd, and it's showing us future price, right? So remember we were smashing into the weekly on 21st of February, and price hadn't shown itself. Lower lows on SPY. Yet HYG was showing it to us, right? See the breakdown here of HYG before price, followed on SPY and SPX. And we're seeing it again. We're seeing it develop ahead of time right now. So if you're just looking forward in the market, if you're pulling out a crystal ball, if you're trying to say where will price lead in SPY and SPX, HYG is telling you right now that even though SPY isn't down at 360 or 3060, right now HYG is telling you should be looking for this. Now, retesting the lows down here on 21st of February, and then we're retesting the lows again in this close on Friday. And if this continues to this downward move, you're going all of these averages start moving down, and price starts to follow. Even if SPY and SPX aren't there, you should see lower lows in the S&P 500. We'll look at Dixie real quick as well. Beartown, baby. I love that. Beartown. And we're going to look at Dixie. Dixie is not as conclusive on this, right? Not as conclusive right now in Dixie. But Dixie is holding up on its monthly support right here. It's also holding up on its daily support right here. So this is another thing that's telling you that prices can go higher, although there is resistance on the weekly on Dixie. If we get a 50 BPS rate hike, you're going to see Dixie rip some faces off in this market. And you're going to see the daily trigger hold up. So I want you to be aware of probably two key drivers here on Dixie, and that would be 104.288, and then below to move this over here or get rid of it so you can see it. Key one would be this 109.55. So if you see a ripper on Monday, let's say, or Monday into Tuesday, you're probably going to see 400 is going to be roughly right around 104.99, believe it or not, somewhere in there. So you could see Dixie fall off into Monday, and then you'll be waiting for some kind of a snapback higher for continuation for the Bears. So I'd expect some violence in Dixie this upcoming week, believe it or not. And if Dixie holds on while the market is squeezing higher, let's say Dixie holds on, the market squeezes on Monday, that's gonna be a sure sign that this is only a bear market squeeze. That's it. If you see Dixie hold on, let's say 104.262 coming into Monday, you come into the stream and you'll say, "Hey Cap, why is Dixie not moving?" It's going to be a sure sign that this is just a squeeze and not a bull run at some point. So if you're like, "Hey, I'm looking for a bullish move higher," and let's say we trade to 400 on Monday, and you don't see Dixie just melting down, it's not going to be an indicator that any move higher is real, that it's a fake move higher. So keep your eyes on Dixie as we move forward. It's looking pumpy, isn't it? Dixie's not. This is the weekly. Dixie's looking pretty strong right now. So just as a weekly chart right here, looks kind of bullish to me. Not fully bullish, but kind of bullish. So you're looking for Dixie to hold 104.25. It begins to have a serious breakdown to 101.81. you will see higher highs from 400. Another one to be looking at today is TLT. And we've talked about TLT. This is a weekly, but let's look at the daily. We've been talking about TLT since the first of the year. And when we talked about TLT beginning of the year, we had said the initial rip up, we'd look for the rip down to about $100. We'd expect that to be bought all through 2023, and then we'd expect a rip at some point this year. So if you're looking at Dixie, it's behaving like it's behaving like we expect a recession to come. And this would be where you're able to buy a dip on Dixie multiple times in 2023. It should track like we talked in early January, track like this. You'd come up, down, up, down, up, down, up, down, and then I think we said by summer, like June or July, you'd expect a final face rip and rally up higher and the market to roll over, the S&P 500 to roll over. Now, whether that happens Q1, Q2, Q3, or Q4, we don't know. But you can see this playing out, right? This recession trade is actually playing out like it has in the past. We're going to take a look at Tesla and NVIDIA next. And then I want you guys to think about some stock tickers for me to look at. We can look at an NDX, IWM if you want, RTY, whatever you guys want. We're going to look at two specifically. We're going to look at Tesla and NVIDIA. And I talked about this in stream last week, but what I really want you to see is the difference in stance on a tech stock. I want you to see the difference in what is a bullish looking stock and what is not. When you have confidence in a trade versus no confidence in a trade. See if I can delete some. Or just remove some drawings here. And we're gonna go back. I'm gonna have to do one more thing. I'm gonna go back and show you something in SPX and SPY. After I go over Tesla, and I missed one topic I wanted to speak about, and that was how to watch how they front run money in the market, or front run a larger move down. Now, NVIDIA, we're going to start with this one. Just on a basis of health of a stock. It's above its monthly, it's above its weekly, it's above its daily, and it's above its hourly right now. When you see stuff like this happening, this is a 30-minute chart right here. Now, price right now is below its hourly trigger, and it's heading in to check its daily. That's at 22137. As long as it stays above its daily, and then the 1 5-minute and the hourly come back down, I'm going to expect NVIDIA to continue higher. Not until NVIDIA breaks below its hourly do I see a trend change. Like, do I ever see a trend change that's bearish or means something in terms of price? Right, get below that daily, and you actually start to see some pretty big significant lows. Otherwise, buyers of NVIDIA, they're doing quite well here, right? They bought back in October, they have bought in December, and you can see that NVIDIA has not felt much of this move yet, right? Where finance has, or the financial sectors have, NVIDIA has not. And if they can hold this 221.58, they look bullish to me. I don't have a bearish take or stance on NVIDIA. Now on Tesla, it's a little bit the opposite, right? It's kind of the opposite right here, isn't it? On Tesla, you can see that we're below the monthly, we're below the weekly. The daily is curling over on Tesla. And you can see it right here in Tesla. Price is below the hourly as well. Now, I think Tesla will squeeze on Monday. I think it does squeeze. It's looking kind of bullish in here. Can it squeeze? Yes. Maybe a target of 186.71 on Tesla. You could see a trade higher than 186.71, but if you get this trade on Tesla, it squeezes up in the hourly and the weekly comes over still upon it. You're then talking about a break of this hourly here in price, and the move is lower on Tesla. So look for 186-ish, maybe 184 on Monday on Tesla. For Tesla to get bullish again, it's much higher. It's we've talked about this in the past. It's at 224. Currently, it's at 222.40 for Tesla. And until we see that on Tesla, there's no trade for me, or there's no buying of Tesla for me. Um, I have no business here buying Tesla at this price. And currently, if we start to break down on Monday, if we break down below 171, I'm looking for a retest of the lows down here and closing the gap at 95, and then I believe it's $52 below that. A significant trend change in Tesla is awaiting. So if you're long Tesla and you don't have a hedge on the market on Tesla, you should be looking to put one on for protecting yourself up here, especially at 186.54ish, probably slightly lower, probably 185, 184. I know sellers are going to attempt to step in at that point and sell Tesla down. And you can just see the stance right now in Tesla versus NVIDIA, and it's different. There's a different stance here in Tesla than there is on, let's say, NVIDIA. I think the two prime stocks to look at. Now, for any of you bulls out there that are like, we're not selling this market cap. You don't know what you're talking about. You do have something on your side, and that is Apple. Apple is holding this market up. So the question becomes, does Tesla decouple from this market? So if you're looking at Apple here, there's two nice lows you're going to be looking for to hold this market and to not see 3,000, 3,300, 2,800. This is the no landing crowd. You want to see Apple hold 146.57 and then also possibly 139.44. And at the worst case is 124.85. And that goes back to January 5th right here. Now, on a larger time frame, right here, we've got that low down there, 124.59 is kind of what I'm looking for. They're not gonna, unless we have something broken with the banks. Maybe a retest of that 124. You'd be looking for maybe 3,300, 3,600 in the market. You start to see Apple trade down to this 124. In that case, you'd be looking for a dip to buy in the market. Unless we get a bank contagion, they're going to hold up Apple. They are. That's just what they're going to do. It's one of their favorite things to do. So 124.05 for the retest on Apple. 139.21 on Apple, and then right here 146.33. Those are your three large supports on Apple. And I am going to expect Apple to sell on Monday at 151.85. Right here. I'm going to expect Apple to recover on Monday, trade up to right about 151.79, and then to start turning around for end of month down here, and possibly get down to like 145 or so into end of quarter at least. If you start to see 3,600, you're looking at 139.35, and then below 3,600, you're looking to retest 125 down below, down here. That's their baby, right? You can see it right here. That's their baby. Let me look at the comments right now and see what you guys are talking about. And I will bring back. We'll start looking at your favorite tickers here. Try not to give me, if you're going to give me a ticker to do, make sure they don't all look the same. But, if I start, because a lot of these tickers are going to look the same. I might pass over your ticker if you So let's look at what you guys are saying in the chat. Announcement coming today, Cap. Yeah, I think there should be an announcement. It's 1:13. Is there an announcement right now? I haven't checked. Let me go through what you guys are saying here. Give me just a second. I want to make sure I'm up to date on all of the. All right, you guys are going. Let me go through it. What some of you guys are saying. Diaz is aiming for a swift deal, but winner won't be known until late Sunday. Okay, so they've changed that. Do I wait? So I gotta ask Cap, do you wait in the morning to buy options, 30-minute 1 hour? Do you buy it open? So Friday I bought calls for Monday, and then I bought really cheap puts for a crash. A really dirt cheap, like penny puts, in case we don't squeeze on Monday, in case there was contagion over the weekend. But normally I can see before the open the next day, or it's implied if we're going to go up right off the opening bell or not. There's a bunch of factors that are included in that. Sometimes I don't buy often the night before as much as I used to. Being in a bear market, it's been more of a challenge. When we're in a bull market, it's easier to see if we're going to go up the next day or not. Do I let the market breathe? I tend to let the market breathe on the open unless I know where it's going. Normally you can kind of tell before. Normally you can kind of tell before the opening bell if we're going to red bar it down or green bar it up. People do say it's better to let the market breathe before trading. And in this program ourselves, we are switching to a new format to kind of slow down the trading for live streams. It's just easier. Yeah, we'll look at the market breadth as well. I should have done that. I didn't do that. Let's do a market breadth real quick. And I think it's here. See if I can get the market breadth up for you. So let's look at market breadth real quick. This is SPX market breadth. Utilities down to 3.3. I'd expect a bid in utilities at that low. Real estate is at 0. Finance is at 0. And I haven't looked at KRE yet either. I'd stay away from KRE. I'd stay away from XLF. I got to be honest with you guys out there. If you're a young trader, if you're a young person, if you're under the age of maybe 35, it's 35, 40, somewhere in there. If you're under 40 years old, I can assure you, I don't know if that's the exact age, but it's somewhere in there. If you weren't a young adult, maybe let's say 18 or older, in 2007, 2008, I'm telling you that you may or may not know this, but SVB is panicking a lot of people. Real traders, real floor traders, pit traders, market makers, anyone that was around pre-2008. If they're not telling you this publicly, I'm telling you that a lot of these people didn't even take part in the 2020 trade because they remember that when things get bad, they don't even get told. Professionals don't get told. When banks close, they're picking up boxes and being kicked out the front door, and they're not told. So when they hear things like the banks, even if they're not scared, they're concerned. I need you to understand that. I need you to understand that banks are not to be trusted ever. I need you to know that banks used to be the driver of the market, the darlings of the market. They used to be trusted, and they'll never be trusted again, ever. And you have to write in your rules that you write your big toolbox. That should be like in your garage where you keep your toolboxes. You put a sign on the wall that says, "Never trust a fucking bank. They will fucking lie to you. they will fucking lie to you, and they will fucking lie to you. They will roll up the front doorstep and not tell you. They will tell you everything is fine when it's not. And whenever you hear like SVB going down, Silvergate going down, this stuff all happening in crypto and Bitcoin and tethers, I'm telling you, like, it's one thing, right? It's one thing when you break things, right? When the Fed is breaking things, you don't mind seeing some things break. It's kind of like seeing like an Apple break. You don't want to see Apple break. There's some companies you do want to see break. I don't want to see Tesla break, but there are people out there that are like, yeah, if they break Tesla, that's good. When you start to see like large banks start to break or crack, there's two things that it raises two questions, and this is real. That the Fed is going to pause, or have to step in, or there's some real bad shit coming that they won't be able to stop happening unless there's more than cutting of rates, like true intervention. And the banks are never going to tell you this. They're never going to tell you the truth. They're going to roll up shop before you ever fucking see it coming. And I don't care if you got a pension, a 401k. I don't care what you have. I don't care if you've got, I don't care what you have, what you say. I remember there was run. I tried to look up some video on this on YouTube, like prior video from 0708, and I can't find it. And it's probably been put in a vault somewhere. But there was panic in the U.S. There was panic in Europe, in England, but there was panic in the United States. There were people lined up at banks around the country, even if they didn't have to worry. When they didn't get a lot of these banks didn't pay they didn't allow the withdrawal of your $250,000 for weeks. Sometime in some cases, months. Your money was tied up in these banks. So, I've had a hard time. I've been searching for this stuff and I haven't been able to find it. It's almost like it's been swept under a rug. But that shit was real. I remember it happening. So when you're seeing this stuff out there, it tweets it's like the you ever have a bad experience, a car accident or something, and then years later you're driving the same way. It's black ice in the road, and you're like, ooh, I remember that car accident. I think that is the knee jerk reaction from older people, and I think that's real. And the even if there isn't a contagion in the banks, if it was a sell side hedge funds that were trying to say, fuck it, we're going to get this price lower. If it was the Fed, if it was somebody out there trying to do it, not only did they accomplish it, but now people are going to be scared. Venture capitalists are going to be scared. There is definitely in the background, if there wasn't money in the market before, there definitely isn't money in the market now. There's definitely going to be. I'm going to pull not only am I not going to dabble in or putting some risk on. I'm fucking waiting until I know more, and I think that's a key difference here. Or not a key difference. When you start to see a bank go down like this, it lends in pause. I'm sure that there are meetings over this weekend going on behind closed doors. I'm 100% sure that the companies are looking into their exposure in banking. Abso-fucking-lutely. And I'm sure there's some old fucking guy out there somewhere that's like, hey, I know you can think you can trust your bank, but you're more than likely you can't. And this is a divergence that has to be resolved at this point and not reassured. The reassurance from the Treasury Department or reassurance from the Fed does not work. Once you let that cat out of the bag, the moment you open that bag open and say, we might have some regional bank systemic problems. The moment you do that, I guarantee you that even if they're not saying it publicly, behind the scenes, there's a class of aged people that don't trust this at all. No matter what's said, they want intervention. Matter of fact, one of the reasons why Ackman is saying this is because They want more than reassurance. They want an action from the federal government to dispel this fear. And unless you see that, and if you don't see that action from the government, I assure you that there will be no trust until something does break. Most certainly, there will be zero trust, none out there. I can assure you of that. So market breadth indicator. Real estate in the shitter, materials in the shitter, financials in the shitter. If you want to buy financials, you're looking for an action. It'd be a great trade, but you need to see that. Otherwise, it's going to get paused and wait and see. I don't think you see the rip face and rally in financials unless there's some kind of more than just reassurance from the Fed or the Treasury Department. I wouldn't trust the banks if I were you, or if it was me. I can't say that for you. I can only tell you from my experience. Don't fucking trust them. Do not trust them at all. They will lie to you. Yeah, MBI is shaping up, but even though the MBI is shaping up, just on that MBI topic, you can see this last leg down right here, right? You can see it right here. And you can see the MBI not even on a low here at this point. And what's interesting is you see the rebuy over here, and then we go right back down. And that's what I'm expecting in the market. I'm expecting some kind of a push higher. We had this beautiful bloodbath down here. You get the buyers, and then bam, they sell it right back down on you. So if you see MBI spike, let's say, right up in here, failure to close, and then we start to head lower to get that low. And you got 3,600 down here, 3,500, 3,300 down here. And there it is. You get it right into the end of the quarter. It might bleed into April. I don't trust it right now. I'm a bull. I'll be honest. To me, the trade is to hedge on Monday high or Tuesday high. Hedge the market. Absolutely. They're going to be hedged. You're going to see it. Matter of fact, this is the crazy part. No matter what we do, no matter what we do on Monday, you're going to expect that hedging to come into the market. Now, could that propel us higher? Sure. If the market gets super bearish up there, that could actually make us go higher, but we'll be waiting to see what happens on Monday. So MBI is not down where it can be. MBI can get even lower, believe it or not. We can get a spike up on MBI into Monday. You can see like a spike up like this, and then we're right back down into the gutters, heading into end of quarter. I wouldn't trust it. If you wanted to buy some calls in the market for tomorrow, it's probably not a bad idea. If you wanted to be long the market, you need to be above 400 and coming off of 400, the consolidation of 400, and then we start moving higher to even jump into the market. And think about it from this perspective. I want you to think about this from this perspective. If the move is up, right? I want to show you this. There's like a path, right? The market takes a path. We've got the soft landing, the hard landing. We'll make this really simple. Let's call this the soft to hard landing path. You have a soft and hard landing path, right? And then you have a no landing path. There's the no landing path right there. Right? If there's a if we're gonna get long in this market, let's just like breathe for a minute. If there's a no landing path, here, you're talking about coming all the way up here. You don't need this trade. You just need this trade over here somewhere. Does that make sense? You don't actually even need any of this. You need some confirmation down here that we don't start selling. Right? You need some new highs and stuff like that. But why do you need to be the guy that's? I don't know why you need to be like we bought this over here. We bought this. We bought this. And I'll buy this. I don't mind buying this. But I don't need to be the guy that is. And I don't think you as a retailer need to either capture the entire trade. You only need this much. If in June or July we come back down here to test, this is for the bulls. Even if we come back in June or July and retest these lows, if you're trying to like call like the bottom or the top, this isn't the place. This isn't the place for you. If anything, they're setting you up right now for, and they're going to do that. My posit here since first of year was, even before first of year, I believe, but my posit here is that for this year, they're going to set up, this is the 31st. So you got the 31st, you've got, here's June, or sorry. Hold on here. Right there. So my posit here. Now price matters. Can you buy if you're a bull, can you buy these lows? Yes. You can. But you should be buying down here, right? At 345, right? You can buy 345. So you can DCA in here. You can DCA in at 3,300 or 2,800 or wherever 33 or wherever price is over here. You can buy all this stuff down here, but should you be buying right here? No. The next buy for bulls is above. It's over here. And if there's ever a dump down, there's another buy for bulls down here. But as far as a bull is concerned, is this a bottom? I would need more proof. I would need to see this hold here and continue higher. But what my posit here though is that for this year, they're going to set up this leg every quarter on you. They're going to set up this last leg down. They're going to set it up. If we don't get it and we start trading this for the next quarter, they're going to set it up again for this next leg down. If we don't get it, they're going to set it up again, and then you're going to get it. They're going to set it up again. You see? So every time we set this up, this isn't the time for you to be, yeah, I'm buying a fucking bottom here. This isn't it. This is the time for you to be watching from today into the end of quarter and ensuring that you're not caught long in here or hedged so that if we do go up, you get paid for that hedge. At least you're getting the trade paid for you. It's the most responsible thing that you can do. Putback spreads. One of the most responsible things here that you can do at the end of each quarter or even the start of each quarter or just have it on for the quarter because invariably, one time this year, there's a very high probability that we're going to be set up for that last leg down, whether it's here, whether it's there, whether it's here, whether it's in December for 2025, and be ready to buy one of these dips down here. You can see it in the yield curve. You can see it in the unemployment rate. You can see it in the Fed funds rate. You can see it in, the inflation rate. As the inflation rate comes down, they're going to try to roll this market and get a better price. Now, there's some out there that say we're never going to get this. We're just going to continue higher. We're going to have no landing scenario. Now, if we get the no landing scenario, I'm open to it. If you don't want, if you think that the SDAO calls is not the right trade for that, putback spreads, ratio spreads, they pay you if we continue higher. They're free. If we never make this leg down, it's the transition. We're at that transition point. So if you went on to @CaptainZalpha and you got yourself SDAO calls, take the money and run, and then wait for a high and start putting on ratio spreads to protect yourself. If you want to know where it was to buy, we already know that the buy was down below here in October. We know we had another one back here in June or July, and you're more than likely going to get one at some point this year. More than likely. And if we don't get one and we grind higher here, that's the least of your worries is going to be catching this right here because in 5 years, 3 years, we're going to go on a bull run. But right now, when you look at the banks, there's some problems. If you start seeing tech workers not having paychecks and going on the unemployment line, you're gonna see the unemployment numbers go up on a large scale. If you see like deployed money not in the market, not being even more so not being deployed or even pulled back out of the market or out of companies, It's going to get dangerous. Coming up this year. I assure you that we're in danger right now. It's not by the dip. If you're in a no landing situation, right? If you're in a no landing situation, you're going to have plenty of time to buy a dip, even on this line. Let's say it's like December of 2024 and sentiment has changed. You hear like VC saying, "Woo, we're going to start blowing or sending some money in the market," or you see your grandfather's out there dumping a couple $1 million into the stock market. You're gonna know when sentiment changes. Sentiment means something, and you're gonna have a run that lasts years and years and years and years and years. You're not gonna get left behind. You aren't. But meanwhile, for this year, that you can see it. It's clear as day. It's clear as day right here that they're ready. Are you ready? Is the question. Are you ready for a leg down? And if you're not ready for a leg down, they are. I assure you. They're ready for some tails. Not big time, but I would bet that tomorrow, any kind of squeeze, they're going to be ready. You're going to see the tails. And as a matter of fact, VVIX is all over that right now. Yeah. So I didn't know that PayPal is pausing all crypto services activity as of 12 a.m. Pacific Standard Time. Yeah, I had I wasn't quite scared, but I've got some dirt cheap dirt cheap puts, and until I can put a hedge on for a ratio spread, I'm at like a violent move down at some point. I've got no, if we were to have a violent move down the next few days, I would not be shocked. I got to be honest with you, I wouldn't be shocked. And we can see him here, right? And see him right in here. Come back up, right? And then slam it down. Are you prepared for this? Is my question, I guess. If you're long this market, if right here, are you prepared for a move like that? They're fast and violent. And how beautiful this looks to you. I know this looks great. I get it. I get that this looks beautiful. But they're set up for it. They're ready to go. They're ready to rock and roll. So you get a green bar up on Monday, and if you don't have, is that working for me or no? I don't know if that's working. Get this nice green bar up on Monday. Failure to close, and it's raining. It's raining men. Hallelujah. That's what you don't want to see. I think that's the fear. And it's one more place. I can assure you that right up here, 397, 3972, 34. Sellers are going to be stepping in. They're waiting. You got Credit Suisse, right? You got Credit Suisse and then Bank of Japan. Is that your tsunami? Hold on here. I got to read something in a text message. They got some news coming out maybe. So FDIC auction for SVB said to be underway. Final bids due Sunday. The FDIC kicked off an auction process late Saturday night for Silicon Valley Bank. This is from a black box from a Bloomberg terminal. With final bids due on Sunday afternoon, according to people familiar with the matter, the FDIC is aiming for a swift deal, but a winner may not be known until late Sunday, according to one person who asked not to be identified because the matter isn't public. No final decision has been made, and it's possible that no deal may be reached, said the people. Representatives for the FDIC didn't immediately respond to requests for comment outside of regular business hours. So that is from a Bloomberg terminal. I'll read that to you one more time. The FDIC kicked off an auction process late Saturday night for SVB, with final bids due by Sunday afternoon. according to people familiar with the matter. The FDIC is aiming for a swift deal, but a winner may not be known until late Sunday night, according to one person, who asked not to be identified because the matter is not public. No final decision has been made, and it's possible that no deal may be reached, said the people. So that should be a catalyst heading into futures overnight. If that deal is reached, I don't know if I'd be short overnight, because if that deal does get reached overnight, you'd probably see a face ripper at some point. On yields, yields can roll over, and the market won't roll over. I see yields rolling over, and I don't. How that impacts the market? The market doesn't always react immediately to that. You read what you guys are saying in the. Hey, Sloth, how are you? I think a lot of this is going to impact. I think a lot of this with SVP. If SVB is able to be bought by a large financial institution, and restructuring, repayment, believe it or not, repayment of most of this money, not 30 to 50%, but let's say if they can get 75% of that money, it would at least it would at least say that the Fed is there to support banks. If that does not happen, if a deal is not reached, I'd be fearful. Abso-fucking-lutely. It says that the Fed put is not there. Yeah, so let's go back real quick. Let's go back real quick just to wrap up the show here, so you guys can take just a quick snap of this. Into tomorrow. This is where the sellers are. Swellers are sellers. 399.78. Expect volatility up on high here, and these will also be catalysts for a move higher, for squeezes higher. Unless you're above unless you regain and hold, you'd be looking for. You can just get rid of all that S2, S3 stuff up there. This doesn't really matter, but what really matters to bear bulls up here is that move higher, and then a holding of this to allow these triggers to come up and velocity to come up from underneath and stabilize the market. If we can't stabilize above 400, it's sell the rip. I assure you that bears right now are up here just waiting to come down, rain hell upon you into end of month. Don't look at the R1s and S1s and S2s. They change for Monday. The pivots will change, but this stuff is all accurate right here. Matter of fact, I'll just get rid of that. We'll get rid of this now. You can't even see it. On the downside, if we don't get a deal, for bears, they want to get underneath 375.18. No deal. We start grinding down. Anything like this, grind. Bad CPI report. Heading into FOMC. If we get bad news this would be not the 17th, the 22nd. Let's say we get some bad news instead. Bears are looking for a little bit of inspiration here. You would get a grind down, and bears need to be underneath this 375.22. They can get underneath 375, 50 BPS rate hike, and we're heading even lower. We're gonna head down to October lows, and we hit the October lows. If we get some more bad news, we start getting some cracking and breaking around the economy. Bank of Japan, Credit Suisse, any of that stuff you're looking for. If the dirty laundry starts getting aired out, we break below the October lows, that's when we're heading down to 3,300. I need to find a trade that almost always works. Without it, I can't come playing in the casino. For me, it's always the market breadth indicator with spreads, always, with time on them too. But currently, right now, there's no trade. For me, right now, if you want the trade for right now, it's a ratio spread on a high tomorrow. And I'll come on an hour early tomorrow, and I'll give you the ratio spread. We'll look at the ratio spread, and then we'll set it up so that once we come up into these highs, you got a better understanding of it once we're up there, and we'll do it on stream, so that you can actually see how it pays. So it actually pays you a little extra, like you'll make like 10% on the trade if we go higher. If we roll over and down, it'll pay you hundreds and hundreds of percent. I don't think that there is, but if you run the ratio spread and we're on a low, it's not really the best trade to take. You want to take it on a high. Yeah, there is. There's high risk and another leg down. Absolutely. I assure you there is. Even if they're not telling you. And we're looking for a down week off of a high this week. If you're losing money in the casino, we are changing the format of this show so that it slows down what you're trading. And if you want to know if we are bearish or bullish, let's take a quick look. I talk about this oftentimes, but I don't always spend time on it. Let me mute a couple things here and show you guys. Let me show you guys a couple things here. Hold on here. I believe this is, yeah, get rid of that there. And I want to show you guys one. Oh, nope. Okay. Let's talk about I'm losing my ass in this market. I'm going to leave you with two things. It's fairly simple. Most people are getting caught up in this market when they try to time the market. I'll be like, why didn't I miss that? You know, like, oh, Cap, I should have been in that. Oh, Cap, I should have been in that. The reality was it was this retest down here. These are called the meat of the trades right here. Right? Take that part of the trade. You want some confirmation of trend. Same thing down here. Now, we have the benefit of seeing this after it's happened, right? But even so, on the down move here, oftentimes people will say, well, I should have taken that down move there. People get bummed out. They're like, oh, man. They're like, you didn't call the top. Or they think that social media is telling them, oh, that guy called the top. Well, I'll tell you this. That guy on social media more than likely has been calling the top every week. He probably called the top here. He probably called the top here. He probably called the top here. Truth is, even if you miss that initial move down, there's usually a confirmation trade higher. And the meat of the trade is after. There's the meat of the trade. Here's the meat of the trade. And this is where the money was right here. This is where the safe money was. And so oftentimes you don't see that. You don't see where the real money is made in this market. When you have confirmation of trend on an hourly and daily trigger. So we have this initial move down here in the market, right? So just currently, let's look at the market right here. You can see this move down, confirmation trade. The leg was lower, right? Beautiful trade right here. Bunch of money to be made in safety. And the same idea comes into play here. If it confirms that we're rejecting here, this is where the meat, believe it or not, this is not the meat of the trade. This whole part here is bullshit. The real meat of the trade is actually this move here. This is where the money is in this trade. And coming into tomorrow, we're coming into that. We will know in the next day or two if the confirmed move is down. Just off these two lines right here, we're going to know. And if this is sold, the move is going to be down. Assuredly, the move is going to be down. So this will be the confirmation for bears for a large leg down, and we'll know it. We'll come right into it. You'll see it. You're going to probably see us come up here, and you'll see sellers step right in. So how do you take that trade to be for safety? Is you put the put back spread on, or you could even just put debit put spreads, credit put spreads, something like that, with stops above if we break above. But the juice of this trade hasn't even started yet, for the bears at least. I know that you think that it has, but it hasn't. The juice of this trade is up here. If you get that confirmation as a bear, it's going to be nasty, and and you can sit down. You can just sit back and watch it print. You don't have no worries there. It's confirming another leg lower. Now the same thing goes right here. You can actually see it where it failed. Here, bears thought that we were going to go down in December, right? Remember, bears are calling for a down move right here, and you could actually see the daily curling up, right, or slowing down. But even so, if you had puts on right here, you would have known or to have had stops here and not gotten completely blown out. And the crazy part was you could have recovered your money on this retest right here. Successful retest, you knew we were going higher. So just in this chart right here, we're bearish. I want you to know that. We're fucking bearish. Not only fucking bearish, we're looking to sell any rips right now. So on a high, you're going to be putting on some kind of a ratio spread, some kind of market hedge. And if it goes against you, and we trade higher than the hourly and daily trigger, and we reject off of it, so let's say this is the move here, up higher, let's say, and you put on your hedge, right? If price continues higher, right, it will come back down, believe it or not, and retest for confirmation. Let me see if I can. The price comes up. You put a hedge in the market. Put a hedge in the market, and it blasts right through your hedge. You're like, oh, shit. Well, if you've got a ratio spread, you're getting paid. If you're in put spreads, and you're like, oh, Jesus, I got blown out of that trade. Even for bulls, they're going to want to see a confirmation and hold. It'll probably give you at least one opportunity to unfuck your put spreads, right? So you're like, okay, now I'm out of put spreads, or I'm out of Estow triple leverage calls, and bulls won their ejection trade. We're going higher, so you have the chance to unfuck yourself out of that trade, and you're able to take a long, knowing that we've confirmed the move higher for bulls. And I want you to just think about this. You're telling me we're going to all-time highs right now? The only way you're telling me we're going to all-time highs is if the Fed steps in. You need the Fed to step in. You need the Fed to say, we're going to make everything right with this bank. We're going to backstop anything in crypto, and we're going to pause rates. Or we're only doing 25 BPS. And even then, I think we're going down. Me personally, I think we are. I think they're going to try to find a low in the market, wash everybody out, and start fresh. So I don't even think that's bullish. To me, it's not bullish. The bulls have a lot of shit to do, man. They do. They have a lot of work to do. They need a full sentiment change. I can show it to you every time. I can literally show you every time it retraces. It might take a week, a month, but it fucking retraces. If you're hedging the market, if you like got a 3 or 6 month hedge in the market, you probably have, even if we're going up, you probably have. I just put it to the side, and in the next week or two, month or two, we'll be right back down there. That's the moment for you to reposition yourself and take the trade long, right? While that's happening. So if you're buying, let's say we're at the top tomorrow, right? Right in here, you're at the top. You put your ratio spread on, and we start going higher. You take the trade higher while staying in the ratio spread. If you're getting blown out on your put spread for June, you take the trade higher and wait for us to come back down for you to go, fuck it, I got to reposition this trade. Right? Put better time on it. Put a better price on it. Any of that kind of stuff. And meanwhile, you've been making money on the upside. Right? So you've been making all this money. We're going up. You're a bear turn bull. And you don't even care about this thing at any point. You're just now trying to get unfucked from it. So you guys are looking for put back spreads, not calls. Put back spreads. Put back spreads. And I apologize to any of you out there. I want to wrap this up at this point. I apologize to any of you that I haven't called over the weekend. I've been trying not to talk, and I'm afraid that if I chat with you on DM or text message, that I'm going to call you. But I will be making calls today, so I will follow up with anyone that I have missed over the weekend. My voice has been destroyed. So I think I'm going to leave you with that today. So tomorrow, so there's a couple things, some key points for tomorrow. You're looking for any kind of a deal tonight with SVB, reassurance from the Fed. It's going to be taken in a positive light. I don't know where futures open. I'm going to assume that futures are going to be up or sideways, and waiting for that news to arrive. Even if that news, even if it's just paused, I still think we get a retracement rally tomorrow. I think it comes tomorrow. Even so, the way price action is right now, I think they're going to try to sell the fuck out of 400. And I would be prepared for it. And even if we go higher, you're still going to expect sellers to come in there. Right? So even if the trade is higher from 400, you're going to expect auto sellers coming in. 100%. And there are two places for you to look for this on the SPY for tomorrow. This is the SPY. I'll cycle through the SPY, ES, and SPX, and I'll leave it here for you right now. So this is SPX. You're going to be looking for tomorrow 39, 32, 35. You're going to be looking for 39, 92, 18. This is SPX for rejection. If you get above the hourly, if you get above, well, I should say this. So tomorrow, I'll be looking for a trade higher to 39, 25, 52. If it holds, expect a trade to 39, 97, 88 on SPX. Expect sellers. Right there, right then and there. For ES, Jesus, we're already doing it. This is the chart that this is the chart. This is the chart for my Captain's Alpha. Oh, man. This is my guy Captain's Alpha chart that was from like February 2nd or something. Okay, so for ES. Oh, man. ES. So for ES, what you're looking, I'm watching text messages right now. And they're funny as fuck. ES, you're looking for a sell at 3935.50. If it holds 393550, you're going to look for a trade higher to 401175. This is the continuous contract. And then on SPY, and you guys come back and look at this video on YouTube. On SPY, you're looking for a trade to 391.60, probably slightly low. It's probably to 391.01. If it can hold that number, you look for a trade higher to 399.30, 399.78, somewhere up in there. When I give you these numbers, I want you to know that we're going to come into volatility before we hit them. You're going to see the market slow as we trade up there. If you're a bear, I gave you the numbers earlier on the Webull charts. If you see any failure above here, see this failure, it's going to be a grind. It's the same as late February. Grind, 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 and then wait for that volatility. Wait for 50 BPS from to smack this market down. Yeah, Hofstetter, send me a DM, and I'll get you my phone number. Give me a shout. If you're still in the stream right now, give me a shout on DM. You know, if you're gonna lose, this isn't to Hofstetter either. This is to any of you out there. This is something I want to talk to any of you out there. I don't care if you're a bull or a bear. As a retail trader, this has been this year or not 2023, but 2022, especially the second half of it. In hindsight, looks great, but it hasn't been great. There's no liquidity in the market. If you can get through this, the one thing I'm going to tell you is this: if you can get through this, whether it's now or into end of next year, and this means if you have to withdraw your money from the market, if this means that you just say I'm not going to trade right now, maybe just follow along in this market. If you can not get shaken out of this market in the coming year, and just wait for the markets to not be as volatile, it's going to immensely change. It's going to be an experience that new investors and traders don't have. If you've made, I don't know how long you've been trading. Hofstadter says he's been here 20 years. The past, I want to say it started in 2018, maybe 2019. It got tough or tougher. There were great periods, of course. But I think this is the normalized. I think we're trying to get to some kind of normalization of markets, with the hope that we get there. I don't know if we ever get there ever again, but at least if you're looking for stability in the markets to be trading safely, it's always in a bull market. Even if you're a bear, there's stability in trading. Sell side, buy side, there's stability in a bull market. So if you're getting cut up right now or beat up right now, you've had some of the toughest goes of your career right now. These are not fun times. And the liquidity in the market is one of the key drivers of that. Your mistakes become more glaring when there's no liquidity in the market. When there is liquidity in the market, your mistakes are helped and glossed over. So you just have to make it through this cycle here. It's a bad one. it's a great time to do it, hands down. There's only one other thing I would posit on this would be that oftentimes traders that trade through these environments, they miss big runs when they actually do happen, because you become very jaded. Uh, you don't believe things, right? So you'd have to be aware of that too, that could affect you in the future. But give me a shout. I'll DM you my phone number and we'll talk. It's not an easy market. I assure you that. If Hofstetter, I'm telling you, man, we're bearish right now. We're in a bearish stance, 100%. I need you to know that. But if you're a bull out there, I need you to know that we're in a bearish stance. I don't give a fuck if we go up to 400 on the opening fucking bell tomorrow. Still bearish. And you need to trade above it, and then you need to hold it, and then you need to consolidate it, and then you need to take off from it to even get bullish. You need to retest it, right? So if we take, let's say, this is the deal. So just set a 1 month chart, or let's see if we can do a 1 hour chart. So if you're a bull, right? You're not bullish. If we trade up here, you're not bullish, believe it or not. I know you think you are, but you're not. You literally need to retest that 400 and then make your way higher. This is where it gets bullish right there. Now, this isn't the time frame, but I'm saying to you, like over time, if this is a week or a month, you're still not fucking bullish. You're not bullish. I mean, you can take this trade. This is where people get cut up. You want that trade higher, confirmation, and then we're moving higher. And bears, if they make this trade higher, they're gonna short here. And if it comes up and over and retests and is successful, they're gonna cut loose and go long. So I don't know what else to say to you. And if you're taking longs here and you're not hedging yourself, I don't know what to say to you either. I mean, it's a hard thing to say there. Like, putback spreads are fucking free, man. They're free. And there's an opportunity, hopefully, coming for it tomorrow. Hopefully tomorrow or tonight or tomorrow, there's an opportunity to actually put one on right here. And if we start trading higher, they'll even pay for themselves. If they trade higher up here, they'll pay for themselves. Then you can sell out of those and put new ones on for a move lower down here later on. So you got to be hedged at some point. And we're going to be trading 5 minute here. So if you're looking at a 5 minute, just in this chart right here, if you're looking at a 5 minute trade, we're going to slow down the broadcast. And you can actually see when we're trading underneath these levels here, we're bearish. We trade above them, we're bullish. So we're looking on this is a 1 hour, but if we're on a 1 hour, we're going to start cycling through the 1 hour and the 15 minute and then into the 5 minute, so that we know when we're bullish and we're bearish. You can see we're bearish below here. You can even see on Friday, we had the live stream on Friday, and we rejected above, and we started selling this down. We called it to the pin, and then we're going to be looking for the trade above into Monday. As long as we stay above these numbers on Monday, we'll take a long call, and we'll put some time on it. Make it a weekly or a monthly or a spread. And so you can make your 10, 20, 30%. And then once we come back to roll over and retest those things. So we're going to slow down the broadcast. We're going to slow down how you guys are making money. Most of the reason is because I'm like, man, we were trying to talk about a 4-second delay, and I was like, if I'm buying a call for 10 cents, let's say I buy a call for 10 cents. So I buy it. It fills. I tell you, hey, I just bought a call. 4 seconds later, you hear it. Then you go to look for that call. Then you go try to buy that call. And then you actually get it to execute. That could be like 15 to 30 seconds. We could be in a rip on a 1 minute chart and coming back down. You could be buying a 30-cent call, comes back down to 10 cents. You're upside down on the next rip higher. I'm already out of the call. And I know that some of you do that. So not all of you, but I know some of you do it. So if I slow it down to a 5-minute, I can say we're bullish for the next 30 minutes, hour, 3 days. I can give you a time frame. I can say next 15 minutes, next 30 minutes, next 2 hours, on an hourly, next few days. We're bullish. And we're going to do bigger time frames, week out, month out, just to slow it down. We'll keep revisiting the 1 minutes for any of you out there that are trading 1 minute charts. But for at least the stream, it just can't. It can't do it anymore. It can't. There's no reason. I'll be honest with you. There's no reason for you to get cut up. There really isn't. So we're going to start trading higher time frame charts. We're going to start looking at higher time frames so you can see how long you can be like this, or where you pull the plug on it, or where you take where you add another side to that trade. You can actually be long and short this market. So you can, if you're in longs with a higher time frame and we roll over or something, we can show you how to take a put spread to cancel that out, that trade out, or some puts that are a week or a month out that can pay for the price of that trade. You can DM me on social media. I'm on there's a bunch of ways for you to contact me. The best way for you to contact me is through CaptainJimJames@gmail.com. The second best way you can contact me is through Twitter. Although I don't check DMs as much as I used to. I haven't had a chance to lately. That's the best way to contact me. DM on, you can Google search me, CaptainJimJames. Twitter comes right up. My email address is in the about section, or either in the about section or the descriptions of these videos. And you can contact me that way. I might not reach out to you right away, but I will reach out to you. And try to follow up with you. If you're having a really bad go of it, I'd say don't spend money. If you're listening to this broadcast right now and you're not up this year, if you're not green this year, I don't care if you're a bear or bull, if you're not green this year, currently at this moment, I would recommend that you stop fucking trading real money. Now, we are building we're building a tool right now that should be released shortly, like next month, where you can paper trade alongside us. And it'll also have a back testing function. So if you're joining us for the first time, I know that there's a lot of like, I have to do this today, I have to make money today, I have to do this today. I'm telling you, just stack your cash. You can paper trade it with us. And we'll look back after a month or two or 3 months, a week, and see where you were making the most money, the least amount of money, where you were getting long when you shouldn't have been, when you weren't putting stops where you should have been, you weren't raising stops. All those simple and simplified too. Like where did you make most of your money? Where did you make bad trades? That kind of stuff. So we can get you guys all into some kind of a rhythm as to when you should buy and sell this market. But if you're not up this year, just January 1. If you're not up right now, there's no reason to have not been up. No reason not to be green on the year right now. And if you're not green on the year right now, there's something fundamentally wrong with how you're trading and investing. Fundamental. I don't care if you're bull or a bear. There's something fundamentally wrong if you're not green on the year right now. And it will blow you out of the market. Guaranteed. Started investing recreationally during COVID, put all my stimulus funds on AMC, and it hit. Never about a small cabin in the mountains for $50K, sold the private 2 years later. Outstanding. If you guys want to know how to make money, it's very similar. Very similar. When times are good in the market, make tons of money. Mistakes are easily forgiven in the market. Then you remove your market and you put them into other investments. And then you reach into those investments to fund yourself. Call spreads on MBI are outstanding trades as well. Yeah, I've done that too. I've broken my account. I haven't broken an account in a while, there's reasons for that that I haven't broken an account in a while. And I had a red week last week too. That was a first for me for some time too. I had a red week last week. Their first year of trading real money. What a great time to do it. Yeah, it is a good time. It's been a good year so far. Year's been outstanding. Yeah, you guys all take care of yourselves today. Have a great Sunday. It's 2:14 in the afternoon. I'm gonna expect futures to be either green or stay. Maybe we green bar up and then we hold, and then they're gonna hold and see what happens in the overnight. Thanks for the tip, John. I appreciate it, man. Thanks for supporting the channel. John Klopp just supported the channel. Ms. Zior tipped the channel. And Canadian dude, right on. Got some Canadian dollars. Team Party Wave 99 followed. Corey Cuts followed. 214 Thugger subscribed. King John the Ill has followed. Nice. I like that. King John Ill. I like it. Speed 33,000 followed. Lily's grandma super chatted. Oh, thank you for direct facts and info. I appreciate it, Lily's grandmama. South Beach Trader subscribed. I appreciate that. Jamie Dinosaurs followed. Grizak followed. Dude, a lot of followers today. Carrion29, Tony Tiger 321. CB followed as well. Dustin Lawler followed. So I appreciate all the followers today. Tomorrow morning, before you guys get out of here, tomorrow morning I will see you all at 8:30. So we will chart out the day for you tomorrow, starting at 8:30. Depending on how the market's going to open, what we expect. I'll give you an expectation too on the opening bars. Should be able to give that to you. And if you're losing money, the stream is being the format of the stream is being slowed down to give you some breathing room, so that we'll be able to take trades that'll be multi-day, hours on end, and also be able to look at the market in different places in the market. Look for stocks to buy, the underlying of a stock, right? So if you're like, I'm getting cut up in options, we can look, or we're going to be looking at tickers to buy. Some of these tickers are low price too. You buy yourself a 100 pack of a ticker and sell calls and puts against it. So I look forward to this upcoming week. If you're a 0-day trader, we will do flashbacks each. If there's a moment where I'm like, it's probably a trade here for 0-day traders to hold for 30 seconds, 15 minutes, 5 minutes, 1 minute, that kind of stuff. There'll still be some of that here for you too as well. I'm gonna leave you guys. Wow, you guys are saying all kinds of stuff. Have a great day, everybody out there. No, I know. So, Cosmo, not project, is correct. Cap is always late. I'm trying my best right now to. The program is changing. I assure you of that. Right now, it's hard for me to get, or it has been hard for me to get here at like even 9:30. But with the formatting change, not so hard, much easier. So I'll be here 8:30 tomorrow morning. I hope, unless that dude, a production again. You are right. I think I have to get up at like 6:30 now. The only other thing I'd say on that is, if we start early at 8:30, I may not be here at 4 every day. Depending on where the market's going. If the market begins to trade sideways, key point in this is, I think what it does is, if we're trading sideways, I don't think I need to live stream in those days, or not live stream, but we'll set up some trades, look around the market, and we'll wait until the market makes a decision on where it's going, and then I'll come back on the live stream. So I think it's like the same hours but less hours. I love you too, Cosmo. I agree with that 100%. I don't disagree with that at all. Yeah, so 8:30 tomorrow morning. I think on the days where I think the key thing here is this. We're gonna focus on trend days up or down. So if we're trending, I'm fucking here. If we start to consolidate, we're gonna chart out the market, and then I'm gonna say no trade. And I'll be back live streaming the moment. I'll be like, hey, look, I'll be back tomorrow in normal time in the morning at 8:30. And then if we get a move at any moment, let's say we get a move at like 2:30 in the afternoon, I'll fucking come right back on, and we'll start talking about it. I'll post something on Twitter or something, say, hey, look, we're finding a trend finally, and we'll come back on and take it from there. But I think a lot of you are losing money. I think most of you just want to make money. I think that's the key driver here. And we can probably shorten those broadcasts and say, if we trade above this number and confirm it, that we can jump in back into the market and take it long or short. Either way. Yeah. So you guys all have a great afternoon. Spend the rest of your Sunday hopefully drinking beers and barbecuing if you're in the South. If you're in the North, you're totally fucked. But I'll catch up with you guys tomorrow. All right. I'll see you guys tomorrow. Later.